Hey everybody, David with J Stone Real Estate. And I just wanted to kind of talk to you about some of the tax changes that are coming out for 2018. I want to first just identify I am not an accountant, a CPA, I'm not a licensed tax advisor, but I wanted to kind of talk about my take on what I see happening with the tax changes that are coming out in 2018 and how they affect real estate. So anything I say is just my interpretation. So for specific guidance, please seek out a CPA or a tax advisor that is licensed to be able to give specific information about the tax system related to your situations. So the first thing I want to talk about out of the three things are the $10,000 property tax deduction. So a new change coming out in 2018 is that you can only cap out now at $10,000 in property tax expenses. So before, if you had $15,000 a year you paid in property taxes, you could deduct all $15,000. Now it's capped out at $10,000. So anything that you're paying above the $10,000 is you're not able to write it off, so you're kind of losing that deduction. The second thing I want to talk about is the mortgage interest deduction. So before it was at $1 million, it has been reduced to $750,000. So the interest that you're paying on that loan up to $750,000 you can deduct. Anything above $750,000 starting in 2018, you cannot deduct that difference. So from 750,001 cents above, you're not able to deduct anymore. Now, from what I've been able to read, that is if you have $1 million listing right now, property, your property taxes are grandfathered in. If you own a house in 2018, like a new purchase, moving forward, that $750,000 cap is there. So right now, you're good if you have a $750,000 plus home, you're grandfathered in. But moving forward, if you sell that house or you buy a new house that's over $750,000, you only get up to $750,000 of that interest deductible. The third thing I want to talk about is home equity line of credit, home equity loans, right? So what you were able to do before is get a home equity loan based on the equity you have in your house, and you could deduct the interest rate that you're paying on that home equity line of credit. So what a lot of people were doing that I know that took home equity loans, they would get it to pay for a wedding or for college or a trip or home repairs, whatever that their personal need was. So they could write off the interest that they were doing on that loan that they were taking from the equity in their house to fund these different items. Well, starting in 2018, it's gone. There's no more. And unlike the mortgage interest deduction where there's some grandfathering in, there's no grandfathering in. Come January 1st, if you have a home equity loan, you're going to be responsible for not being able to deduct the interest that you've been paying on your loan from your taxes. So if you were doing that before as part of your tax process, then you need to talk to an accountant to see where else you may need to work on spreading out your tax liabilities to reduce your taxable payments. Again, I'm not a accountant, I'm not a CPA, I'm not a licensed tax advisor. These are just my observations, my interpretations from what I have read, and each source I've read from has a different skew to it. So if you have any questions, if you feel that some of these changes are going to be pertaining to you, please talk to a tax advisor and get the accurate information that relates strictly to you versus a generalized data that I'm providing you right now. But if you have any questions about home ownership and is it a good time to buy or sell, please feel free to reach out to me and we can have a discussion that's tailored specifically to you and your needs so we can figure out the best options for you. Appreciate your time. Take care.